The Vanguard S&P 500 ETF has been a staple in many ETF investors' portfolios. Today, we are going to find out if they deserve that distinction. Fasten your seatbelts, folks. This is going to be a good one. VFV tracks the S&P 500 index, which is the premier U.S. exchange that basically consists of the 500 largest publicly traded companies by market cap. It is widely regarded as one of the best representations of the U.S. stock market and the broader American economy. I often stress that it makes a lot of sense for a Canadian's portfolio to have solid exposure to that American market. And of course, this ETF is one way to accomplish just that. VFV is one of Canada's older ETFs, as they've been trading since November 2nd, 2012, when they launched at a price of $25 per share. This is an ETF that has never had a stock split. So they have grown more than 450%. If we included 20 years of dividends, oh yeah, that would be a much higher total return for sure. When we have an ETF that is pegged to a specific index, it should go without saying that that index becomes the benchmark for that ETF's success. We will be looking hard at the S&P 500's numbers as we get into this deep dive, as we really want to know if VFV is performing at their benchmark, or preferably even better. There is always the chance that they are underperforming, but honestly, based on their popularity, I have a feeling that will not be the case. Speaking of popularity, a sub to the channel makes you pretty darn popular around here. Before we go any further, we do need to talk a tiny bit about withholding tax. Because this ETF holds U.S. equities, the IRS is going to want their 15% on all of those dividends paid out. This happens as those dividends are paid to the management company, so Vanguard in this case. So when you look at that yield they are paying to their shareholders, that 15% withholding tax, that has already been removed, so you do not have to worry about it. You're not going to lose an additional 15% off the dividends that you're expecting. This will be the case no matter where you hold the ETF. Some investors really don't like the idea and will instead look at the US version of this ETF, which is VOO. Then they will put that in their RRSP so they don't have to lose any of those withholding taxes. Mind you, when you do that, you get taxed on the whole thing when you eventually pull it out of your RRSP. So that's always a consideration in regards to VOO. I kind of think we should put that to the test as well, and we will definitely do that as we get into the deep dive. All that being said, I think it is time to jump into the numbers, and that means we need to call on the maestro of multiplication, the friar of fractions, the one and only Mr. Math. We will begin with a little surface data. Their current value at time of recording is $135.26. The NAV is $134.96. Their net assets under management, that's coming in at $16.2 billion, and they have a beta of 0.95. So the average for the market is 1. So it really isn't that surprising that they're pretty darn close to that. Their price to earnings ratio, that's coming in at 28.62. And they have an average trading volume of 233,966. Looking at their return on equity, that's coming in at 29.32%, and they've got a nice looking return on assets of 10.62%. These numbers look absolutely perfect. I like what I'm seeing. Let's peel back another layer and take a look at some of their fund specifics. We will start, of course, with those management fees. They do have a management fee of 0.08%, and that's actually pretty low. So if you're expecting more fees in that management expense ratio, well, you won't be disappointed and you'll be pleasantly surprised, as it's only 0.09%. This is a very low fee ETF. Switching to their holdings, they hold a total of 504 assets in this ETF, and their top 5 holdings consist of, well, we got Apple at 6.89%, Microsoft 6.69%, Nvidia is at 6.20%, Amazon at 3.69%, and Meta at 2.24%. That's looking pretty magnificent. Switching over to their diversification, they are heavily diversified into internet technology with 32.47%, Up next is financials at 12.38%, and then, well, healthcare at 11.73%. This is a well-diversified ETF. That just simply goes without saying. Let's dive a little deeper and take a look at those dividends and returns. On the dividend front, they have a yield of 1.051%. It's a quarterly dividend of 37.7 cents per share. I will point out that dividend does move quite a bit up and down, depending on what type of returns they've gotten off of the S&P 500. So it's not a steady dividend. But for the most part, it's generally right around here, so you don't have too much to worry about. Looking at those returns, on the 3-year, their return on investment comes in at 33.79%. Factor in those dividends, we get a total return of 34.16%. On the 1-year, that return on investment comes in at 27.60%. Sprinkle in those dividends, we get a total return of 28.94%. On that year-to-date total return, 20.77%. Factor in the dividends, we get a total return of 21.75%. That's not too shabby. Overall, these returns look really good, and they certainly do lend themselves to a total return circle the wagon foundation ETF for sure. We are going to go even deeper and pull it all together with, of course, those benchmarks we talked about earlier. As a reminder, VFV had a 3-year ROI of 33.79%, a 1-year of 27.60%, and a year-to-date of 20.77%. These are the numbers without the dividends. So how do they measure up to the S&P 500? The S&P 500 had a 3-year of 23.40%, a 1-year of 26.95%, and a year-to-date of 18.09%. Looking at that, VFV does outperform them on all time frames. They are very close on the 1-year and the year-to-date, but a really big win on the 3-year. Now, do keep in mind, we're looking at one single day 3 years ago, but they did beat them by that much. So that could simply be a little bit of a fluctuation when we're looking at the math. So that's always something to keep in mind. So what about VOO? Do you save a lot of money by investing into that one instead and placing it in your RRSP? Theoretically, you should, but let's look at the math. For this one, we will use total returns, as the dividends are, well, they're the important part of the comparison, to be honest. As a reminder, VFV had a 3-year total return of 34.16%, a 1-year of 28.94%, and a year-to-date of 21.75%. VOO had a 3-year total return of 27.85%, a 1-year of 28.59%, and a year-to-date of 18.69%. Honestly, that's not what I was expecting because VFV won again. We were expecting VOO. Perhaps VOO just didn't have a great day when these measurements were taken, and VFV did. One other thing I did want to also mention about these two ETFs is that they're priced in different currencies, and that could also be a factor in why VFV beat VOO. Nonetheless, it sure does make it look like the VOO play is not as significant as it could appear to be on the surface. Okay, I certainly have enough to move into my final verdict. I like this ETF a lot. It is, as I mentioned earlier, a very good blue chip circle the wagon foundation ETF. First off, this is a great ETF for anyone who wants some exposure to the US market. And seeing they are the biggest economy in the world, why wouldn't you want a piece of that American pie? This is a very good ETF for total return investors, and they have been very consistent in providing good growth and moderate dividends. One detractor for some investors may be the price, as it is a pricier ETF. For those using Wealthsimple, fractional shares are, well, unfortunately not an option for this ETF. The pure income-focused investors will also more than likely pass on this one, as it does not have a huge dividend, and there are other similar ETFs with covered call options. Nonetheless, I still think this is a great ETF for most investors, with a really good short, mid, and long-term outlook. If you are interested in VFV, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on asset management stocks. Thank you for watching, and I will see you in the next video.